and 𝗏𝗏. We have more data to watch this week, mainly on Wednesday and Friday, but it's not going to be a heavy week. After the heavy storm of economic data and geopolitical events in the last 2 weeks, we are going to have a slight week, but with potential for unforeseen events. Along with too much economic data, the G20 meetings, 𝗙𝗵𝗄𝗧 Association, and Boris Johnson's resignment made last week a history week. Let's review the most important events and data in the week ahead with me, Ahura, and IFCM markets. Number 1, UK GDP. While we will have the first impact of the home electricity and energy prices increase, the last published data, especially retail sales in recent months, were also decreasing, signing for lower GDP numbers in May. For May, the consensus expectations is about minus 0.3% to confirm the negative results for the second month in a row. Numbers still support the BOE's hawkish policies and another 25 basis point rate hike. These expected data cannot support the UK's stock markets. Number 2, US inflation. Although we are waiting to see the negative impact of slower economic growth on inflation and push it lower, it's not likely in June numbers. It may happen in the next 2 months. For June, we are waiting to see another increase to 8.8% in headline numbers, up from 8.4%. These numbers will support the Federal Reserve for another 75 basis point rate hike, which means increasing US dollars. Due to the expectations of lower energy prices in the following months, prices will probably start decreasing. However, food price can stay the main concern. Number 3, RBNZ meeting. Reserve Bank of New Zealand will hold its monetary policy meeting and interest rate decisions this Wednesday. Overall expectations are for another 50 basis point rate hike in July meeting as well, to make it the 3rd consecutive rate hike. Even if it cannot lift the kiwi against its crosses, but it may pause the burst. Number 4, Bank of Canada policy meeting. Thanks to the oil prices, economic growth in Canada seems fine. At least it's not worrying like many other economies. While higher oil prices helped the Canadian economy in the past months, inflation also was increasing. CPI in May increased by 7.7% annually. Inflation is increasing, which means it's likely to see even more tightening policies from Bank of Canada, even with the 75 basis point rate hike, while overall expectations are for 50 basis points. The economic growth in Canada will slow down in the following months, and loonie can still continue its path of weakness. Number 5, China GDP. After a heavy Wednesday, Friday also should be a challenging day, starting with GDP numbers in China. Economic growth in the second quarter is expected to slow down to 0.6% from 1.3%, with a 4.4% annual growth. While many international factors like supply chain disruptions can hurt the GDP numbers, we know that China can buy cheaper oil from Russia now, which decreased the production's price. So, seeing an upside surprise should not surprise us. And finally, number 6, US retail sales and industrial production. After a 0.3% decrease in May numbers, with higher prices, it's expected to see the retail sales to increase by 0.8% in June. However, it's mainly the nominal numbers. By adjusting the inflation rate to these numbers, actual sales should decrease. On the production front, expectations are for another 0.1% growth in June, the same as May. These positive expected data should support the US stock markets on the last day of the week after the weakness in the first days. Thanks for watching this video and hope it's going to be an amazing week for all of you.